Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities continue to trend positive this week, with major developed market equity indices in the US, Europe and Japan hitting new all-time highs. The rally received support from strong earnings reported by an AI-powered tech sector giant. Asian equities also continued their recovery, led by China offshore, China onshore, and Hong Kong, responding to the recent attempts by policymakers in China to support markets. Some of these notable measures include the People's Bank of China cutting the 5-year prime loan rate, which is the key mortgage reference rate, by the most on record at 25 basis points. Banks are reported to have approved a Chinese yuan 124 billion of loans for select property developers. And third, the authorities increased scrutiny on domestic quant funds for allegedly contributing to an earlier equity market sell-off. Back home, Indian equities touched new all-time highs. The Nifty index was up 0.9% week-on-week, driven by upbeat global market sentiments and improving foreign investor inflows. Broader markets underperformed Nifty this week, with the Nifty Mid-Cap Index up 0.3%, while the Nifty Small-Cap Index was down 0.1% for the week. Among sectors, realty and telecom led the winners with gains of around 4%, while metals and IT were the losers with cuts of around 1%. The Indian fixed income market took a breather this week, with Indian government bond yields declining across the curve, most likely responding to lower supply pressures in the weeks ahead as the government borrowing for fiscal year 2024 concluded as per plan, while the demand remained strong at the RBI's weekly debt auction. The 10-year Indian government bond yields fell 2 basis points to close at 7.08%, while the 3-year and 5-year Indian government bond yields fell 1 basis points each. The INR rose 0.3% over the past week to close at 82.9 per dollar, supported by a weaker USD, lower crude oil prices, and improving foreign investor inflows. Brent crude oil prices fell around 1% for the week to close at $82.4 per barrel after hawkish Fed policy meeting minutes and US Fed officials indicating that interest rate cuts should be delayed at least for a few more months. Coming to macro updates, nothing major for the week except the RBI releasing minutes of the RBI Monetary Policy Committee meeting for Feb of 2024, where it decided to keep the policy repo rate unchanged at 6.5% with a 5:1 vote and retained its monetary policy stance as withdrawal of accommodation. The RBI governor noted that monetary policy must remain vigilant and not assume that the job on inflation front is over, and they must remain committed to successfully navigating the last mile of disinflation, which can be sticky. Further, while retail inflation cooled to a 3-month low in January, price gains remain well above the RBI's medium-term target of 4% due to volatile food prices. Deputy Governor Michael Patra noted that the outlook for the Indian economy remains highly sensitive to inflation risk and restoring price stability remains key. It is only when inflation subsides and stays close to the target lastingly that policy restraint can be eased, Patra mentioned. One member who voted against the rate move and monetary policy stance noted that monetary policy should be given more room for economy to grow, as there is no evidence that the economy is overheating. He also noted that the time has come for the MPC to send a clear signal that it takes its dual mandate of inflation and growth seriously and voted for reducing the repo rate by 25 basis points and to change the stance to neutral. An external member noted that in the present conditions, deceleration in food inflation could be key to bringing down the headline inflation to target on a sustained basis. Another external member noted that MPC can wait a bit longer to ensure that inflation continues to move to the target as growth has been resilient, while an internal member noted that while durable signs of disinflation give the rate setters some comfort, upside risks remain from food inflation. At this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.